The Minority Market. Episode 1. Why most people should never enter the stock market. Most people think the stock market is a place where intelligence, hard work, or even luck guarantee success. They imagine that if they read the right news, follow the right tip, or watch the right chart, they will suddenly make money. I want to tell you something that might be uncomfortable. That is not how the market works. The stock market does not reward effort or hope. It is designed to exploit emotions, impatience, and ego. If you are here thinking this is a shortcut to wealth, this episode is your first reality check. The first thing to understand is that 90% of market participants lose money consistently over years. Not once or twice, but year after year. Why? Because the human brain is wired to respond to fear and greed, not to probability and rules. Most people react emotionally to price movements, to news, to whispers of the next big thing. They buy when everyone else is excited and sell when panic spreads. They believe they are smart when a trade wins and curse themselves when it loses. But the market does not care about intelligence, effort, or frustration. It only rewards those who behave like the minority, those who have structure, discipline, and patience. Imagine a child in a candy store. The candy is all around them, bright and tempting, and the child wants everything at once. Every candy looks like the best candy in the store. The child grabs randomly, often choosing the ones that seem popular or are in front of them. Some candies are sour, some are spoiled, but the child eats anyway, hoping for a sweet surprise. Most people behave like that in the stock market. They chase what is popular, react to every sudden movement, and hope for a quick win. The difference between this child and a disciplined adult is that the adult has a plan, knows what they want, thinks before they act, and waits for the right opportunity. In the stock market, you need to act like the adult, not the child. Another uncomfortable truth: intelligence is not an edge. You could be the smartest person in your office, understand business models, numbers, and charts better than anyone else. Yet, without discipline, rules, and emotional control, you will likely lose. The market does not reward being right. It rewards following a process consistently. Being intelligent can make you overconfident, and overconfidence in trading is almost always fatal. The goal is not to be right every time. The goal is to survive, protect your capital, and take advantage of probabilities. That is what separates the minority from the majority. Expectations are another trap. Most beginners want big wins quickly. They want 20 to 30% gains in months. And when that doesn't happen, frustration sets in. When they face losses, even small ones, panic takes over. The minority mindset accepts that losses are part of the game. Losing is not failure if it is planned and controlled. Losing is failure only when it comes from impulsive decisions, wipes out your capital, or damages your psychology. Protecting yourself from the biggest mistakes is far more important than chasing the biggest wins. If you survive, you have the chance to grow steadily over years, compounding advantage after advantage. Most people also fall into information overload. Social media, financial news, WhatsApp tips, charts, indicators, predictions, gurus, newsletters. All of this creates noise. Most of it is useless, and some of it is dangerous. The market doesn't reward knowing more. It rewards acting correctly on what you already understand. Clarity and simplicity beat complexity every time. If you find yourself confused or chasing the latest trend every day, you are already thinking like the majority. And that is exactly what you want to avoid. Let's pause and reflect for a moment. How often do you make decisions based on fear or excitement? Do you ever buy because a stock is hot or sell because the market is panicking? Write it down if you can. Even noting this once is the beginning of awareness, the first step toward thinking like the minority. Awareness alone can save you from costly mistakes that most traders make every day. Another lesson is about patience. The majority wants instant results. They believe that sitting idle is wasted time. In reality, waiting is often the most profitable action you can take. Waiting for the right opportunity, the right price, or the right trend separates winners from losers. The market will always give opportunities to those who are prepared. The key is to be ready and to recognize that missing a trade is not a failure. Impulsively taking trades you don't understand is. Let's talk about losses again. Most people treat losses as personal failures. The minority treats them as data points, feedback, or learning experiences. If a trade goes against you, it is not an insult. It is information. How you react to it, how you control your emotion, and how you adjust your plan defines your long-term success. This shift in perspective is subtle, but incredibly powerful. Start viewing losses as teachers, not enemies. Here's another insight. The market doesn't punish you for being wrong occasionally. It punishes you for not following your plan consistently. One impulsive decision can erase weeks of careful analysis. One over-leveraged trade can wipe out months of disciplined saving. Most beginners fail because they react emotionally. The minority survives by following rules, controlling risk, and thinking in probabilities. So, how do you start acting like the minority today? First, accept that you need to unlearn common myths. Intelligence alone is not enough. Tips are often traps, and emotional reactions are fatal. Second, focus on behaviors over outcomes. Did you follow your rules? Did you control your emotions? Did you act with discipline? Third, begin journaling your decisions and emotions. Even 5 minutes a day, noting how you feel when thinking about investments will start building self-awareness, the single most important skill in markets. Finally, here's a practical exercise for today. Watch your thoughts and emotions whenever you see a stock moving up or down. Notice fear, excitement, impatience, or FOMO. Don't act yet, just observe and write it down. This simple exercise trains your brain to recognize bias before it impacts your decisions. It may seem small, but repetition over weeks builds the mental muscle needed to survive and thrive in markets. You are listening because you want to learn. That willingness is the first filter. Most people quit before they even start. You are here, and that alone sets you apart. Over the next few weeks, we will break down these concepts, expand your understanding, and start building the foundation that separates the minority from the majority. By the end of this journey, you will see the market differently, not as a place to chase quick wins, but as a structured environment where discipline, patience, and clarity create long-term advantage.